You all for joining us this evening. My name is Sean Thompson. I'm one of the sponsors of our group that's purchased the Emerald Cove portfolio. We're excited to share this investment opportunity with you, some real estate in Destin, Florida. It's a portfolio of two properties, and Kevin's going to tell you more about the property. We all know that the economy right now is in a state of turmoil or kind of shaky, and that the stock market's probably in a bubble. But we are still very bullish on real estate. The commercial real estate in a lot of areas could be in trouble, especially when it comes to the office space. But we still feel really, really good about multifamily because no matter what happens, people still need a place to live. And our investment strategy is to pick areas where all the economic factors and all the demographic factors are also in our favor. So we are very bullish on the Panhandle area. The population continues to grow in the Panhandle area. The state of Florida, the last population estimate or prediction for the Panhandle area was from the period of 2020 through 2025. They predicted a 6.9% increase in population, and CBRE still predicts a 3.9% increase in the population over the next 5 years. And what's really important is 24% of all the population in this area is in the very important 18 to 34 age group. So those are the people that spend the most amount of money, and that's the target for our housing here. The folks that live in this area in Niceville and Valparaiso area, they're the workers that make Destin function. The rents are so high in Destin because it's a tourist area and all the resorts. The rents there are around $2,500 plus a week to stay along the coast. So those folks need a place to live. And Kevin will go into later on why this area is so important. But to get past this Valparaiso, Niceville area is another 40-minute drive. And he'll explain later on why this area is so unique and why there are so many barriers to entry in this market, and why we are so excited to have captured these properties for our investment. Not only that, but I'd like to mention also that Florida has one of the lowest state unemployment rates of any state. So Florida continues to remain a very, very good place to invest. We're very bullish on Florida. We're very bullish on the Panhandle, and we feel like we've got a real winner in this property, and we've already closed on it, and our numbers continue to get better. And I feel very confident with the team that we have in our property management company that we can succeed with our business plan.
So thank you everybody for joining us tonight. Again, we really, really appreciate carving out a little bit of time in Thursday evening to listen to the opportunity here that we have with the Emerald Cove portfolio. The disclaimer, you'll be able to read that on the cash flow portal. So all of these documents that we're going over are going to be on our cash flow portal. And so please do, when you have the time after the presentation, you can log in, take a look, download the document, scroll through it at your own pace. But we don't want to spend a whole lot of time on that. Just remember that this is a 506C investment offering. Buyer beware, as always, when it comes to investing and with real estate. We are here to provide you these projected returns based on everything that we've done with the financial data that we have. But if you can go ahead and go to the who, I'd like to introduce everybody to our team that we have that's sponsoring this opportunity, along with so to start with, we've got Mr. Sean Thompson here, who's our primary presenter tonight. Sean has a very good career that he's done through both his IT companies and then his real estate investments that started back in 2003. He's acquired quite a portfolio in the Tennessee area, as well as multiple investments in both ground up development of multifamily, self-storage, and then this acquisition here. Then we have Dr. Armando Bardiza from South Florida that started out as running his own pharmacy And this fertility pharmacy is a very niche pharmacy in the area. It was purchased by private equity many years ago and was able to use the proceeds to pivot also into real estate investing, and has built up a very substantial portfolio through lots of successful and shrewd investments in real estate. And so combined, our two key principles here have been a guiding force in us getting this deal put together and closed. And so now we're so proud to be able to bring it to you all as a backfill opportunity. Our other sub-sponsors, which would include myself, my name is Kevin Kohler. Wear many hats, but one of them is as a real estate broker, where my focus is on buyer brokerage and acquisitions and underwriting. Before real estate, I developed solar farms throughout the Southeast and did several LEED Platinum and award-winning projects with development companies in Florida and throughout. We have Mr. Edward Schmerian, who's based out of LA, who is also a acquisition specialist, real estate broker, and property manager. Works with his own family through their own investments and operations of those investments. Fodi Karastamatis, very, very experienced general contractor. He's worked his way up through the industry, being able to take things from dirt plans all the way up to full build out, and then operation of the assets, which is a huge, huge important aspect of what we're doing here with our business plan. So we're very, very pleased to have him on board here as well. There are a couple other members that we have on our team as well that work tirelessly on the back end. And we're very, very pleased to have them all here participating and contributing to provide you guys a strong investment vehicle. So moving forward a little bit into the investment itself, if none of you are quite aware of exactly what it is we're here to talk about, it is a 120 unit portfolio of two properties, formerly known as Riviera Ridge and Riviera Bay Townhomes. The purchase price was $17.7 million, and we were able to, in a tight capital market environment in 2023, find this opportunity with a $9.9 million debt assumption with Freddie Mac at 3.64%. So we've already gone through all the joys and challenges of an agency loan assumption. That is now completed, and we have earmarked $2.3 million for our CapEx. And we're able to have the seller of the property reinvest $2.1 million of proceeds back into the property as a limited partner investor, which as a broker, I was very proud of, because that provides a lot of transparency and cooperation as we were closing the deal. So in terms of receiving documents and getting everything in line, we had a partner versus somebody who was just trying to exit out and sail off into the sunset. So overall, the summary of this investment is that we have a $100,000 minimum. It's 120 doors. We're currently projecting at closing pro forma 2.3x equity multiple, about 8.5% cash on cash return. Our ideas right now are between a 4 and 6 year hold, probably at 5 years for exit. And again, we wanted it to lean more beneficially towards our limited partners. So we went with an 80-20 equity split, with a projected 6% cash on cash return annually, and going up through, from 6, and then an IRR of 20.7 and an annualized average return of 26.7%. So a little bit more about why you should care about it beyond these metrics. So the area is fantastic in Northwest Florida, in the Panhandle. We were able to acquire these at $147,500 a door, which is about 20% less than the market average right now, or a little bit closer to 30% actually. And then the rents were very below market. So the seller has been owning the property for 12 years, and he hadn't pushed the rents up since prior to the pandemic. So we took advantage of that, knowing that we would be able to come in even before doing any turns to units, that there was a significant uptick of what we could do in terms of bringing these units to market. There's solid market fundamentals in this area, which I'll go in a little bit deeper in future slides. And part of it is due to its proximity to military bases and tourism locations, the Destin market, which Sean's background points out of. And then our general partner team invested over $3.5 million of our own money into the deal because we believed in it so much. So we're not just looking at our limited partners to ride through the investment. We're deeply, deeply invested in this, and we're inviting you on this journey with us because we're really, really excited about bringing everybody in to this investment opportunity. So the portfolio itself is broken up into two different properties. So we have Riviera Ridge Townhomes, which is 84 units with a mix that skews very heavily towards 2-bedroom, 1-bathroom units. This is a great factor to have because, as some of you may know, properties that are primarily 1-bedroom become a little bit higher risk, higher turnover, more headache. It's a C-class area. This one is in Valparaiso, Florida. And we believe that we'll be able to bring these up to kind of a B-class quality, and the surrounding properties are there's a brand new housing development to the south of the property, and there's development that's gone in all around. So we're really riding in on that and being able to raise these up along with what's going on in the area. They're 1984 build at Riviera Ridge, with some units, the ones that have the vinyl siding on the second floor, in 1986. And we're the third owners of the property, which is another thing we like. It's easier paper trail of maintenance and all the work orders that have happened on the property over the years. The second property is known as Riviera Bay Townhomes. This is in Niceville, Florida, which is a nicer area, more suburban feel to it, even for a secondary market. Again, these were built in 1986. So the developer started with Bay, then they built with Ridge, then they built Bay, and then they went back and finished Ridge. So we're able to see a strong growth in these units as well, with an estimated upside of about $400 per door. So now going into the market overview. So Okaloosa County, Florida, which is the red highlighted box in the northwest, that's where these properties are located. And the county, one thing to point out is a lot of the county is actually owned by government and the U.S. military. So that's just something that we've kept in the back of our heads. So the Riviera Ridge property, which we've rebranded as Emerald Cove West, is adjacent to Eglin Air Force Base. So Eglin Air Force Base is the largest U.S. Air Force base in the world. It's a training base. It is there's a lot of testing done there as well. It's one of those military facilities that the Department of Defense would never close. They've invested too much money into it. And there's several ancillary facilities directly around it, including Hurlburt Field. And then the Destin Airport uses the runways from Eglin as well, with the terminal being on the north side of the property. So it's a very, very active site, and it's a 2-minute drive from one of the properties. And as Sean had mentioned earlier, the stats of the younger demographic, it's important to remember that, because again, 40% of the county are renters, not homeowners, and a significantly low unemployment rate, something that we're happy to take advantage of. In the meantime, the military, with all the testing, brings in a lot of these defense contractors, which, as you go into the next slide, everybody will see, well, the one after this, but there's a very high median household income. But if you could, Sean, go right back up to the map real quickly. So the map, what we want to point out is, like, all the green area that you guys are seeing there, all that green, that's all government land. Like, you cannot build on it. So there's a very, very high barrier of entry, and we love the fact that we can ride on that, because it's preventing development from delivering a lot of new units. So we don't have concerns that all of a sudden a couple thousand doors are going to pop up out of nowhere. And there's one road that you see going north out of the map, and that's the road that takes you to I-10 into Crestview, Florida. Crestview is one of the nearest suburbs where people commute from. On rush hour, which is crazy to think that this area has rush hour, it is a parking lot either way from commuters coming from Crestview. And so we love the fact that we can take an opportunity to bring these units up and bring those people back from Crestview into town. Another nice thing that we like about it, Niceville, Florida is one of the nicest high schools in the state. It's one of the highest rated football teams in the state. For high school, this is a Friday night lights kind of town. You want to be at the games every Friday, and then you want to be at Waffle House after the game. It's a great, great area to be in, low crime, and high desirability. And in fact, what we see is a lot of the military members that maybe get sent and deployed to Destin or to Eglin or to Hurlburt, when they leave and exit the military, they stick around. And that's a great, great labor pool. In fact, our maintenance manager is a good example of that. He's ex-Army and stuck around in the area. So in terms of tourism, we've got Destin and the beaches of Destin, powder white sand. I live in Fort Lauderdale myself, and it is literally some of the best beaches I've ever been to in the world. They're fantastic. So we recommend that everybody gets a chance to visit. It's a great area, and we're so proud to be investing in it and supporting the economy there. In terms of those market demographics, I'll touch on it really quickly. Again, average annual household income or median household income of almost $90,000 a year in a market with such a small population is something that a lot of people have had trouble grasping, but it's due to all of the employers in the area and the government and the military and the fact that these guys are not going anywhere. Again, unemployment rate is low, median age is healthy, and another thing to bear in mind is, as we were saying with military and the investment, when Hurricane Michael went through farther east, the government spent they're spending almost $7 billion in infrastructure upgrades and improvements to Tyndall Air Force Base and to Eglin. These are massive, massive facilities. Tyndall is further east near Panama City Beach, and Eglin adjacent to the west property. And we're very, very proud to be able to ride on that investment as people keep coming in, as Sean had mentioned, with the growth of the area. Touching in a little bit about the rents. So when we acquired these and began underwriting these properties, the rents being offered were hundreds and hundreds of dollars below market, because the seller, being a owner, operator, and manager, husband and wife operation, they chose the simple button, and their cash basis was enough to where they didn't need to really push rents to make good money on their investment. So we were able to come in and immediately start raising rents upon closing. We look forward to further bringing rents up towards that 1750 plus number as the market allows. Another thing to naturally point on for all of you, a lot of people always ask about tax advantages. So we have selected Madison Spec, which is one of the large leaders in the industry of cost segregation, to be able to perform our study. We are waiting a little bit impatiently to see that this bonus depreciation bill that's on the Senate floor gets passed and signed, which would actually bring these numbers up, because we're basing our initial estimates on a 60% bonus depreciation. But if this current bill that's on the Senate floor does pass, it will bring it to a 100% bonus depreciation benefit for year one. And the fact that we're doing a majority of our CapEx in year one will also increase that benefit to the team and to you, our investors. So at this time, I'm going to hand everything over to Mr. Fody Krastamatis so he can dig in a little bit more in terms of what our business plan is on these units. Thank you.
Thanks, Kevin. I'm going to try and keep this pretty short and sweet. I know everybody's taking time away from their family to be here. So as you can see, we've got about 2.3 million set aside for CapEx. And with that CapEx, we are going to be renovating the interiors and exteriors of the buildings. Right now, we are in the process of getting our bids. Bids are coming in. Once they come in, then we'll look through them. I will go through them with a fine-tooth comb and value engineer everything we can. We don't need to spend a lot of money on things that aren't necessary. We want the property to look right. We want the property to be in good shape. We want it to be a nice property, but there's ways to save money and still achieve all those. So our property management company, I had the pleasure of meeting with them in person, and we also have our weekly meetings, and I, for one, am extremely impressed with them. They are very professional. They are on top of things. They have hired our new maintenance supervisor. We had a meeting with him today, and things are moving nicely over there. We do plan on starting the upgrades within the first 6 months. Right now, we are fixing up some units, getting them re-rented, and so on. And eventually, we will rehab all the units in both properties. So as they come up for renewals or before they're released, our plan is to renovate them, regardless which property they're at. As they come up, that's the plan. New cabinets, countertops, flooring, paint, general cleanup. And then for our value add, we're looking at billing back some of the utilities that are still not being billed back, possibly adding pickleball courts, in-unit laundry, and things like that. That will bring more value for our tenants, which will also help us increase our bottom line. As you can see on the left, it's pretty humdrum, original classic build. We are looking to renovate and refresh our units to look more like the picture on the right. And again, with the LVP flooring, should be good value. It's not like the old linoleum that you have to replace it every time somebody moves out. So new light fixtures, really we're just trying to give people a nice, clean property, well-maintained, something that people can call home, something that they're comfortable in. And, that's about it. It's a beautiful property. We were out there not too long ago, and I was just blown away by how nice the surroundings are. The area is great. And like I said, management is just, I've been very, very pleased with them. So as you can see from, we're going to start the renovations within the first 6 months. It's probably going to be 12 to 24 months, somewhere in there, before we're done with the renovations. And and then once we get to towards the end of this project, we will figure out which one of our exits is going to work out the best for us, for you. And that's about it. So whether we refinance or sell, The east property would actually be a great condo conversion, the smaller property. So we have lots of ways to exit. And as time goes on, we'll figure it out. And that's about it. Kevin?
We did,
Tom?
I just want to point out, we did our underwriting based upon the most conservative strategy, which is the full exit in 4 to 5 years. The additional options we have there are based upon what happens in that market and what we could potentially do. But we're going to maximize our exit on this deal.
It's nice having multiple exits.
Yeah, it gives us lots of opportunities,
Absolutely.
especially with the 36 unit, the neighborhoods that surround it. It's surrounded by 500,000 and above houses, so it gives us a lot of opportunity with the smaller property.
Yeah, and the one thing about that, like, so when we're acquiring these at 147,500 a door, what we identified is that even now in today's market, a 2-1 townhome would be selling for almost double that price at almost like 290 to 300,000. So that being the case, it's a very good benchmark to say that, you know what, maybe in 5 years, it's going to make a lot of sense to go ahead and pay an attorney to plat everything out. And so probably around year 3, we'll convene and figure out what makes the best sense and do a little bit of a study on that expense and the benefit for it. But all of underwriting, as Sean said, was done on our most conservative approach, which is just a clean exit.
I also want to mention that when we were there and right before the closing, I was just amazed to see all the new construction around this property. Everything around it is new. It's beautiful. It's going to be high dollar rents. They're built to rent homes literally next door. I mean, right on the other side of the fence. So all these things are just add value to our property. So, and in turn, we'll add value to their properties as we continue our upgrade. So I love this. I love this deal. I'm just thrilled to be part of this.
Consistently, when we were doing our underwriting, this is the lowest rent property in the area because nothing had been done to it since it's been built. They've literally not touched anything. The pictures that we selected for the kitchen there, the before picture was probably one of the best units.
Absolutely.
This property has been beat on a little bit, but that presents a tremendous opportunity for us to come in here and clean it up. It's not had the best reputation, so we've gone in with the help of the management company. We've changed the names of the property. We are going through and requesting new reviews on the property. The property management company, I could not be more happy about them. Our property management partner over there is Carroll Management Company. I think since we originally did this slide, they're closer to 12,000 units in Florida. They have been, you never know who you're going to get with a property management company, even with all the referrals and all the good reviews on them. We didn't know what we were going to get with them. We've been working with them for over a month now. The amount of people that show up on the marketing calls, the people that we worked with have been top notch. The management people that we were working with, they've had tremendous experience in this area. They know this area. We've done property management calls. We've recorded those calls. If it's something that you want to see before you invest, we can show you some of the property management calls. But the property managers, I couldn't be more happy with. The lady they selected to be the on-site property manager has got tons of experience. She's been a realtor. She's lived in this area. She's been a broker. She's been a property manager. She's owned her own property. She's just phenomenal. I can't say enough good things about who they selected to run this. I've been very, very impressed with the caliber of people that have showed up. And they managed to grab our maintenance guy from another property, and he has tons of HVAC experience. He's been a property manager. He's an Army vet. I just continually impressed with the property management company, and I did not think I would be as impressed. They have answers when they bring me a problem. They have an answer to the problem, and they this is what we recommend that you do. Is this what you want to do? And they've been spot on with their suggestions. We've had a couple things that we've asked them to do specifically for us, and they've been very accommodating. So I can't say enough about our property management partners in this deal.
You know, if I can add one thing, Sean, you were saying about the units, how they've been a little beat up. They have been. I mean, they've been there since what, since the mid 80s. But I got to tell you, in my 40 plus years in construction, the bones of this property are in great shape. I mean, you're going to find problems here and there, but I've worked on a lot of properties that even much newer than this, where structurally they're in horrible condition. This is a great, solid property, and that's what I love about it. It's just everything is solid, from the deal to the property to the management team that we've got in place. I'm just thrilled. I just love this, being part of this deal.
Yeah, I've got almost $750,000 of my money invested in this. I've got family members invested in it, and I have no problems taking it to people and saying, you know, this is something that I'm proud to be a part of. So with that, if this is something you're interested in continuing with, please access the cash flow portal. The cash flow portal has all the information on this deal. It will, this recording will be uploaded to it later. So if you want to go back and rewatch this recording, it will be on there. There's more pictures of the property, more information. If it's something that you decide you want to go forward with, there's a place in there where you can read through the PPM. The PPM stands for Private Placement Memorandum, and that's basically, you know, our promises to you. It has our business plan in there. It's, you know, it has all aspects of the investment, and there's information in there that protects you and it protects us. So, you know, please, if this is something you're considering, please take a moment to read it. If you have any questions, we want to answer all the questions that you have about it. So if we don't answer your questions here in a few minutes, please contact one of us, contact your sponsor. They'll get you in touch with any of us. We want to make sure that you're satisfied and you have all your questions answered. But just for Kevin to have found this for us, I mean, it's everything you can ask for. It's an environment where everything is in our favor. It's the kind of environment that you look for as an operator of properties, such that, you know, the population continues to grow. It's a very popular place for people to move to. The local economy is thriving. The tourism trade, people will continue to come to this area. It's one of the lesser expensive areas in Florida to visit. Most of the population in the Southeast can drive there within a day. So it's a very, very popular area for both Kentucky, Eastern and Middle Tennessee. Some folks from the Carolinas go there, but Georgia, Alabama, those areas, they love to come to the Florida Panhandle. They love these beaches. They can drive there. They don't necessarily have to fly there. The cost of food and everything else there, the entertainment is not outrageous. This is a very, very popular place for people to go to. And the folks that work there, they need a place that they can afford to live at. And that's what we are providing. So please, if you have any questions, please let us know. I see we've got a couple questions out there. Well, one of the questions was the occupancy rate. Yeah, right before we closed, we were, so there's questions about the occupancy rate at closing and then year to date. When we purchased it, the occupancy rate was north of 90%, was in the mid 90s on both properties about the time we purchased it. Right after we purchased it, right about the time we purchased it, there was a corporate lease on 7 or 8 units that canceled, or basically because of some law changes in Florida, there were some folks there that were working that could no longer work there. So they canceled, it was a landscaping company that canceled a lease. And then we've had some folks that have been nervous about the changeover and they've left, but we had, was it 22 or 24, 22, I think, month-to-month leases that have all been renewed at a higher rate than what they were before. Our property management has done a spectacular job of outreach to all these tenants. They've been coming in and commenting on like some of the changes that we're making and how happy they are about that. And we continue, anytime you take over a property, your occupancy always drops just a little bit because people are nervous about changes in management. But we're changing the name of the property in order to get any of the stigma that's been attached because it's got a reputation out there. The previous owners haven't done a whole lot with it. So we've changed the name of the property. We're changing the marketing on it. We've launched web pages. We've changed things on apartments.com, and we're soliciting new reviews from tenants that are there. Next question is, are there any incentives for the selected property management leasing company to generate efficiencies and bonuses for cost savings and higher rental rates generated? Yes, there are. So we have an incentive program, and we're still fleshing it all out, but we have an incentive program for the folks on site to get things leased. And then, of course, the property management company, the more units that are leased, their management, the amount that they get paid is based on the percentage that they collect. So if they don't collect, they don't get paid. So that's one of the highest incentives. Since they've taken over, they've had 100% collections. We have not missed $1 in rent since they have taken over. That is something that that is extremely important to them, and of course, it's important to us as well. So they've done a phenomenal job. I've been so impressed with the management company, and I don't feel like we could have selected a better company.
And another thing on that too is that in terms of like a financial incentives that would be coming out of the investors' revenue, it's not really set up that way. So their incentives are more high level because the management company is looking to partner with us on future acquisitions as well. And so they are really pushing themselves to go above and beyond on operating the Emerald Cove portfolio to show that they are a good partner for long-term growth with Empire Builder Capital. And so through that, it's a good incentive on their part that's not going to be costing the investors any additional concessions to the balance sheet.
So
Yeah,
Kevin,
I believe that they said that they had, I think it was 11 more month-to-month renewals that were just awaiting signatures. So that's also another little feather in their cap.
For those of you that are interested, we have recordings of our asset management meetings with the property manager that we can share with anybody who is potentially interested in investing in this. So we are completely transparent with our management. There's a lot of groups that they basically hide everything and only show you what they want you to see. We have weekly business meetings with the property management group, and then we have other meetings about other things that are going on at the property. But we have weekly property or asset management meetings with the property management. We record those and put them out for the investors to see. So you can watch a video. They typically last anywhere from 20 to 30 minutes every week, where we discuss, what's going on with the property. As we get into when we do our updates and start doing our CapEx, we'll have CapEx meetings. So we have not started. We're still taking bids. And one of the questions we have here is who's going to be managing the update. So Kevin, would you like to discuss the gentleman that we have that's boots on the ground?
Yeah, so we've got a multi-layered team to cover the boots on the ground and the updates for CapEx. So on the top level, it's headed by Fody here from the webinar. And then on the ground level, we've got another 40-year general contractor, Mr. Fran McKinney. That is a fantastic person. He's run several different companies, all in the construction business with building hotels, a precast foundry, etc., and is now helping oversee the bidding process through RMR Carroll Management. And he's the one, like, with when you got somebody that's been doing the business of construction for 30 to 40 years in that area, he knows all the vendors, all the contractors, and we know for a fact that we're going to be able to get best value estimates and production and performance from quality people and not just bottom dollar contractors. With the team between Fody and Fran, with an 80-year cumulative contracting experience, we're very confident that we'll be able to hit our budget, implement the business plan as necessary, and not skip a beat in terms of keeping track of all the dollars spent.
We had a question, when will the replay be sent out? This replay, this recording will be attached in cash flow portal for anybody who signs up to see anytime they wish or to share with anybody they want. And then please contact the person that invited you to this webinar if you have any questions, so they can put you in contact with myself, Kevin, or Fody on any questions that you have. If I don't have the answer for you right off the top, any of us can find the answer for you. You know, please ask any questions that you have.
And again, if there are no more questions to be put into the Q&A section, then, you know, we thank you all so much for your time. I know we had kind of set aside 1 hour for this, but if we'll be able to give you back 10 minutes of your time to enjoy your evenings, then that's just as fine as well. And yeah, I think that does answer everything else. And then we look forward to discussing with each of you as we move forward. So the link for the cash flow portal, everybody that's registered, we're going to be sending out that link to you directly in an email. You'll be getting it tonight. This video recording will be up on the portal by the morning as well. So we're going to be working on getting that in as quickly as Zoom can process the recording and get it back to us. And yeah, we look forward to bringing you along this journey. It's really going to be a great opportunity. A lot of bigger operators are starting to put their eyes on Northwest Florida, and thankfully we are already on track to get other opportunities down the road. But again, thank you all so much for your time this evening.
Aaron, can we answer a question for you?
Yeah, hi. I was just curious. You've already got this particular property, you know, under contract. You say you've got it with property management and everything,
We've
right?
actually closed the property. We have closed the property and we have control of the property. We just have not raised all of the capital expenditure money to do all the upgrades.
that was kind of what I was curious about. So what's outstanding? What are you trying to get for the, you know, how much CapEx you're trying to get?
So we
What's this
still
raise?
have about $2.5 million for we've raised everything but the CapEx money.
Excellent. Okay.
Yeah, so of a total $11 million raised, we're seeking another 2.5.
Okay. Super. Yeah, no, I'd seen your presentation once before. You know, I follow MFC and see Kevin along with Edward some days on some of the
I'm sorry about that.
programming. You're sorry about that? Yeah, no, those guys are both excellent. And you
No,
know,
they are. Kevin, and I'm not just saying this because Kevin's here and because he's part of Multifamily Freedom Chasers. I have worked really, really hard. I think Fody can say the same thing. Fody and I've worked, and then we've got some other people who have worked really, really hard to find properties that meet our requirement of doubling our investors' money over a 5-year period. Those properties right now are extremely hard to find. I mean, we have underwrote hundreds and hundreds of properties. And Kevin is very remarkable in that he's been able to find things that he comes across properties all the time that meet those well, I don't say all the time, but he seems to find properties that meet that requirement where like we struggle to find those. I mean, we try and look at everything that comes out that meets our buy box. And it's very, very important to us that we choose properties that we feel like that will help us win. The property has to be a B or a C class property in a B market with population growth. We like to see 2% or better population growth. It has to be something that's got value add to it so we can pump up the value for our investors. It has to be something that, you know, we can raise the rents on, and the environment, the area can absorb the higher rents. And you know, when we doing our research and everything, Kevin and some folks that work with Kevin started calling around, and they got a hold of some of the folks in the area that own other properties, and they were like, oh, thank goodness somebody bought that and they're going to raise the rents because they feel like this property has been holding the rents down in this market for some time. And that made us feel even better about it. So, yeah, we're just thankful that Kevin found it. It's kind of a wild story about how he found it. We don't want to, and those of you that are, we really appreciate you spending time with us. We don't want to keep you from your family. So, we can talk a minute about how he found it. It doesn't really have much to do with the numbers on it, but Kevin found it as kind of a on market but off market property, because it was on market but it wasn't listed right. And Kevin dug into it and found that the price was for both properties, but it looked like it was only the 84 unit property that was listed. So he dug into it deeper, and people were basically passing on the property because it wasn't listed correctly. And once he figured out it wasn't listed correctly, because it looked like the price was out there for 84 units instead of the whole 120. So it looked like it wasn't that great a deal. And then he dug into it and found out that it was 120 units instead of 84. And he was like, we could get interested in this. It started looking like a much better deal. And then when we started working with it, and the previous owner decided to come in as an investor on it, that he has done so many things to make our life so much better. It's just been a win-win-win situation for everybody. And then to put on top of that, this property management company that we found, they came highly recommended, but we just didn't realize how good they were. We're like, we'll give them a try for a year or whatever and see how well they do. And if we'll shut them off pretty quick if they don't do what we think they ought to be doing. And as an operator who's operated a lot of properties myself, I've been thoroughly impressed. And I think I can speak for everybody else when I say we've all been impressed with the property management company. The lady that chose, I could not have picked. I told Kevin, basically this is the profile of the person that I think would be best for this property. And I could not have picked a better person. The lady that's running this has got tons of experience. She's tough, but she's fair. She's got a lot of enthusiasm and a lot of energy. And the lady who is the regional manager has got tons of energy and tons of ideas, and there's no quit in her. Like, I am so happy with our property management group so far. And if you want to listen to some of our recordings, I think you'll feel the same way.
Yeah,
Wow.
I was blown away when our onboarding call with them was like 17 people deep from their side.
Kevin and I are
I was like, okay.
eyes were real big, and as soon as we off the call, I'm like, Kevin, who are all those people? What? I mean, I thought there was going to be like 3 or 4 people in this call, and when there's like 17 people showed up, I was like, Kevin, who are all those people?
Yeah, it's a very warming thing, and again, I mean, it's an opportunity that we just, again, there's so many boxes that get checked, and we put this under contract in the middle of 23 when the capital markets were going crazy, interest rates were skyrocketing, everybody was uncertain about every little aspect of things. And out there, some of you guys might be going to some of these conferences where somebody gets on stage talking about how they raised $2 million last year, that we raised 9. We're not out there like drumming our chests. We're just out here working, and it's our job as fiduciaries to our investors. Like, we want to separate ourselves from so many of these other operators where we're truly trying to be transparent to bring you along the journey with us. That's why our asset management calls have these recorded segments that we are able to put out and publish to everybody directly. The monthly KPIs will be published directly as we're receiving them from management. And again, this is your money. We are stewards of it. We're going to take care of it, just like all of our money that's also invested. And that level of passion is not going to go away. So we really do look forward to you, your friends, your partners joining us on this as we backfill the raise. We close that out, and then we go on to our next opportunity.
Well, we don't want to keep you. We appreciate, we're right at an hour. We really appreciate your time. Thank you for joining us. And again, if you have any questions, please reach out to us. Thank you so much.